Hey everyone, welcome in to another daily editorial here on the KE Report. Chatting with Brien Lundin, we're going to be talking gold and the underlying gold stocks. Going to spend a bit more time on the gold stocks as well. I know a lot of you, our listeners, care a bit more about the gold stocks, especially because we're all invested in them and we're all trying to figure out just what's going to drive these stocks and get some more momentum to the upside like we saw a couple months ago. Brien is the editor of the Gold Newsletter and our host at the New Orleans Investment Conference this year, happening November 20th to 23rd. I'll post a link in the show notes so you can register for that conference. Please let me know if you're going to be there. Brien, comments on gold today. Gold's doing pretty well. It's up a little over $20. And I think more importantly, on the spot market, bounced right off that 2,300 level. On the futures, it was a little bit above 2,300, but overall, it's not breaking below 2,300, and it's really just trending sideways. What's your takeaway from this price action?
Yeah, Corey, we've had a bit of volatility. We had a big drop earlier this month when we got news that China neglected to either purchase gold in May or neglected to publicly announce that it had purchased gold in May. And then we had a big drop in gold. But since then, we've been back and forth, and gold's remained above that key $2,300 level. Whenever we've seen a pullback, the metal has bounced back the next day. And as we speak, we were just talking off mic about that gold's up today, and I can't find a single reason why. There's not been any important data, nothing very significant at least, and gold just pops up. I think we're in one of those situations where the forces driving gold don't really care whether everyone in the junior mining share market is off on the beach somewhere on vacation. These central banks, these Chinese investors, these Chinese savers, they really don't care. And that's the main thing driving gold right now. Gold just wants to stay at these levels or go higher. And every little event or every little move or big move by Western speculators to drive it down can only hold the bottle under the water so long before it pops right back up.
So, Brien, what about the Western investor? It's been interesting to see just how much demand has come out of the East, and that's truly driven price. Even the recent rally that started in March, it didn't come on the back of any specific news event. There wasn't a banking failure. There wasn't anything that really, I think, shocked the markets. It was just gold started seeing some money come in, clearly from the East, and it just kept moving higher and breaking to higher levels. Everyone's always looking for a reason why. How are you viewing the future for gold, and what might drive it, or if it simply still is just a momentum play?
Yeah, it does need a reason, but sometimes we either don't know those reasons or it takes us a while to figure it out. In this rally, it took us about 4 to 6 weeks to really figure out what was moving the metal. And in that case, it turned out to be central banks, the People's Bank of China, and a remarkable level of buying demand from domestic Chinese, both in physical and on their futures market, which we'd never seen before. We'd never seen Chinese investors and savers chasing the price upward, which they were doing this time. And frankly, I think there's something else out there. I think there's a shift, small but significant for the gold market, in global allocations toward that safe haven of gold because of what's happening in the world with interest rates at levels that are totally incompatible with the levels of debt that are in the world. So you had all those factors combining. I think what you're getting at is let's look ahead and see what's the next big factor coming up. And that factor is the one that we had thought was going to be evident or impacting the market earlier this year, a Fed pivot to the rate cutting half of the cycle. Now, that's been postponed over and over again, but we're going to get in a few months to the point where that's going to pull into view once again. The Fed fund futures markets are predicting that we're likely to see a rate cut, the initial rate cut, sometime this fall, and perhaps even two this fall. So that's going to pull into view in a month or two. And I think the markets are going to begin speculating on that. And one of the biggest places they're going to speculate in is gold.
What about the gold stocks, though, Brien? Fact of the matter is that they did have a rebound. The bigger ones were moving in March. Some of the juniors started going in April. But when we hit in May, we lost a lot of that momentum, and now we've been in a little bit of a corrective phase. The juniors have corrected a lot more. The juniors just really haven't gone anywhere. And the majors, even some of the mid-tiers, haven't offered that sort of leverage that investors want. Sure feels like we're in the summer doldrums right now where it's lower volume and news isn't getting recognized. But what's your outlook for these underlying stocks that had a decent run, but then have lost some momentum here?
Yeah, especially in the junior market, investors had gotten so many head fakes over the years that they're really gun shy about jumping in. And on that powerful rally this spring, they really didn't understand why gold was going up. It was going up relentlessly, setting new records every day. So it wasn't exactly providing any good entry points. And people really didn't understand what was driving it. So if they didn't understand that, they didn't know what kind of staying power it had. But now I think we're going to get a factor, the Fed pivot, that these investors can readily understand. They will not only know that this is a factor that is going to drive gold much higher, but they can look ahead and know that we're going to have at least a couple of years in this rate cutting cycle. So they can bet on a trend like that. And with gold already at record highs or record trading levels, there's no reason there's going to be no resistance jumping into this market because it can go so much higher in a rate cutting cycle. I mean, look at it this way. During the harshest rate hiking cycle ever in Fed history, gold gained about $700 an ounce, or about 40%. If it does that when the Fed is hiking rates, my goodness, it's going to do much better when the Fed finally starts cutting rates.
So, Brien, you've been around this sector for a while, and I've heard from some people, also veterans in this sector, that they think there has been maybe a more significant change, especially for the junior market here, where financings aren't as available even when gold was running higher. There aren't the same amount of funds or money managers or even analysts paying attention to the sector. It's made the junior game a lot more difficult. Do you think there has been a significant shift just in the way the market relates to the junior metal stocks?
Yeah, I really do I really do feel that there has been, a number of factors. There's more competition. You can get leverage to the metals in other ways than junior mining stocks these days. There's not as many private investment banks, if any, out there that are very active in the market and available to retail investors. There's less money in the sector. The junior sector used to really catch on fire when generalist investors would come into the market on a move. Now those investors can speculate in crypto. They can speculate in the NASDAQ. They can, NVIDIA, everything else through options, et cetera. It's a very much more sophisticated market out there. So they can get that kind of betting action in a lot other ways. I just believe that this market we're about to head into is very similar to what we saw in the early and late 1970s, in the early 2000s, in that it is going to be so long-standing and so dramatic that it will inevitably attract a lot more money to the sector. And it's such a tiny sector. The other thing that's happened over the years is that the available pool of capital has grown so large. There are vast figurative oceans of liquidity sloshing about the markets. And when that slosh finds its way into that narrow channel that is the junior mining share market, these values are going to absolutely explode.
Yeah, that's a good point. There's a lot more money out there, but the sector hasn't grown that much. So little allocation could still push it. But hey, it's an argument we've heard for quite a while now. Any companies, any stocks out there that have caught your eyes in terms of news flow, in terms of market action, simply because, look, we have had some decent news out of the sector. Even this week, a few good stories. One negative story with Victoria Gold, but a lot of these good stories don't seem to be getting major pops.
Yeah, you mentioned the terrible accident at Victoria Gold. Thankfully, no lives were lost, but it's going to have a resounding effect and has had a resounding effect on other companies in the Yukon, and particularly closely related Banyan Gold, closely related in a lot of ways. And Banyan obviously did not help itself with major financing either. but it has gone down because of that. It has been punished by the market because of Victoria's accident to a degree where you're about $6 or less US per ounce of gold in the ground for that resource. And it's apparent that the resource is going to not only grow significantly more from here, but the economics are probably going to get better as they narrow down and pinpoint the higher grade sections of the resource. So I really like Banyan as a deal that's been created by this market development. Although you have to look at that, I think, with the 2 to 3 year time horizon at least. There was another interesting thing that just happened literally yesterday as we speak, in that New Pacific Gold announced a very impressive pre-feasibility study on its silver sands project, one that showed with a relatively modest capex investment, it's going to be one of the largest silver producers in the world, primary silver producers. And the stock went up about 6 or 7% on that news. Then once the market closed, there was news of a coup attempt in Bolivia, where New Pacific has all of its projects. Fortunately for the company, the market was closed. And even better yet for the company, the coup was put down and the situation was resolved before the market opened the next day. So they essentially got away clean with really no effect, and a net positive effect after it was all said and done on their share price. So I think that's a sign of how robust those numbers were for the pre-feasibility study, but how strong that shareholder base is as well. So, I've always liked that. I think it's that incident kind of highlighted the political risk behind the company, but it's still a worthy speculation in my mind, considering the magnitude of the projects it controls.
So, Brian, when you're looking at something like Banyan, let's just recap that one. Raised a little over $14 million. They did it at a bit of a discount to market. And then, on the back of that unfortunate news out of Victoria Gold, that further pushed the stock down. But now it's rebounding. But Banyan also has such a large resource, and a lot of people were looking at Victoria Gold as the potential takeover target. As you said, maybe this extends the timeline. What do you want to see Banyan do to advance that now 7 million ounce resource?
Well, I think Banyan has a great understanding of what they need to do. They don't really need to grow it much larger. I mean, it is already a world-class in size at about 7 million ounces. And it's obvious that there's the exploration upside. They could grow it significantly. But I think any major acquirer, which is what you want to kind of pretty the company up for, is going to recognize that upside potential. What they need to do now is pinpoint the higher grade portions of that resource to try and show a quicker payback, because it is a fairly low grade resource right now, and they want to find those higher grade starter pits to really supercharge the economics. And if they can show that to a major and also tick off all the other boxes in terms of social capital, local relations, permitting, et cetera, which they have a wonderful, extremely talented team to do that, and they are addressing all of that. So I think they're doing what they need to do. A lot of that they're doing now isn't the sexy stuff of drill results, but it is going to make the company much more attractive to an acquirer. And the big concern I would have is if an acquirer tries to take advantage of this dip in the share price. Regardless, I think it's a bargain right now.
Okay, on to New Pacific Metals then. That pre-feasibility study came in with an NPV of $740 million. These are after-tax numbers, an IRR of 37%. Nice to see something above that 20% range. Over 157 million ounces of silver with a capex of $358 million. Because of that Bolivia jurisdictional risk, what do you think comes next with this company already at the pre-feasibility study, just at the Silver Sands property?
Yeah, I think they're going to keep advancing it. The project has gotten so large that don't want to say it's invincible, but it's gained some protection. That capex, that operating cost, the size of that project, that means jobs in Bolivia. So whichever regime might be in power in that country at any point in time, they're going to need this project to keep the populace employed, help the employment in the country. And the project is technically It really isn't that complex, so that they are going to want to have the company, I would think, the government will want to have that company operating the project because it will maximize employment and taxes to the country as well.
One thing we should also note about that New Pacific share price is it was really washed out in March, rebounded just like a lot of these stocks through the middle of May, and has been on a downtrend. Do you think this pre-fees is enough to stop that downtrend, potentially buck that trend and start moving higher?
Maybe not, because what really drives a company's share price is drill results. And they do have other projects, and they may be able to provide some of that to the market. The key here, I think, is that Fung and his group have a long string of successes. They have the respect of larger companies. They are doing everything absolutely correctly from a technical perspective. So I think what we're going to see at some point is either this project very quickly going down the development pipeline or being an acquisition target for some other companies. Pan American Silver has a big position in the company, so that would be a likely candidate for that. Yeah, I think it is a company that you're not going to look at as a drill hole speculation, but as a set it and forget it. Again, with a 3-year time frame on it. I don't see how the company, obviously anything can happen, but I think in a few years, you're going to see this company trading at a much higher level if it's still around.
Well, investors have done better on these development, more advanced plays recently, more of that mid-tier category because the juniors have legs. So New Pacific definitely is still very much in that kind of mid-tier range, but kind of waiting for maybe one of these mines to come online. Either way, it was an interesting and positive pre-feasibility study. Thank you very much for your time. Always great chatting with you. And as I mentioned, everyone, click the link in the show notes to find out more about the New Orleans Investment Conference, November 20th to 23rd. Thank you for your time. We'll chat again soon.
Great. Thanks, Corey.